What's up, you guys? Sam here. I know that today's video has a little bit different setting than what you're used to. I'm not at home right now because I am with my kids at the park, so this is just gonna have to work today. But that does not diminish the topic we are talking about today. If you are an investor in the stock market, then you've gotta hear this. You see, 2022 is gonna be a completely different year than what we are used to. And if you're not adapting, if you're not gonna watch this video until the very end, you could get very, very hurt financially. This is a must hear. And as always, you guys, before we start this video, if you wouldn't mind just smashing that like button, that helps this channel out tremendously. I do not get paid $1 from YouTube for any of the content that I create, so that means the world to me. Thank you so much. Okay, you guys, 2022 might be a wild year in the stock market, in the real estate market, crypto market, and we need to prepare for that, and that's what I'm gonna get into right now. Okay, first things first, before we get too deep into this video, I need you to get out a pen and paper. This is very critical. I want you to write down these two different things. The first thing is, ask yourself, are you a long-term investor? And to determine if you're a long-term investor, ask yourself this: are you buying stocks as a long-term investment to retire maybe when you're 65 years old or 59 and a half? Or are you more of a short-term trader, like a day trader, where you see a stock go up and then you sell it when it's nearing its peak, and then as the stock goes down, we buy the dip, and as it rises, we sell again? Essentially, do you log into your account and look at your portfolio every single day, possibly multiple times a day? This is what I would call a short-term trader. If you are a short-term investor, a trader, then you should be freaking out. This is where short-term traders have always been saying the following: you should be taking profits off the table often, every time your stocks are shooting straight to the moon. Don't wait until the absolute peak. Be taking profits off the table. Now, if you're a long-term investor, continue the strategy of dollar cost averaging, or DCA as they call it in the investment community. And just really quickly to explain what DCA is you just constantly are buying, whether that's daily, weekly, monthly, and usually you buy ETFs like the Fortune 500 stocks or the Russell 2000 stocks, which those are like your smaller stocks but have potential for high growth, and you're just constantly putting your dollars to work over a long period of time. This is called dollar cost averaging. We cannot invest this year like we did in the past 2 years if you are a short-term trader. If you're a dollar cost average type trader, long-term investor, continue on. This is a great time to be buying because things are just dipping. That's the best time to buy. With the Federal Reserve hiking interest rates this year, we need to pay closer attention to what's going on in the market. I know this video is a little bit of a different setting and it's a little bit short, but it's very critical that you make this distinction between a long-term investor and a short-term trader. So depending on what you answered, that's the strategy that you should be taking forward. I know this video was a little bit shorter today, and I just had to quickly get this out there because it's so critical. And as always, you guys, I will try to bring you the most value to this channel, so please subscribe and hit that bell for notifications so that you can be notified whenever a new video of mine drops. And you know who to follow for everything money. I'll see you in the next one.